Hi everyone. Thank you so much for joining us today. I'm hoping you have. I hope you're having a great afternoon. Today we have Mr. Rajan Anandan, Managing Director of Sequoia Capital and Search, who's joined us for a session on product market fit. Uh, Establishing, like, when you're going out, with a new venture, you really need to understand what your whether what you're building, whether it's resonating with your audience, and that's something that they would need. So today we have Mr. Rajan Anandan, who's going to walk us through how to establish whether you have achieved the right perfect fit for your product with the audience that you're trying to cater to. So I'm going to hand it over to Rajan.
Great. Thank you, Gautam. Hi, everyone. I hope all of you are safe. I hope January has gone well for all of your companies, and let's hope that February is going to be better than January. Hey, so today we're here to actually talk about, do you have product market fit? I'm assuming that all of you who are watching this on live stream, either on YouTube, Facebook, or LinkedIn, are founders of seed stage companies, or on the founding teams of seed stage companies. That's probably why you're here. I hope that's why you're here. And you're here to have this sort of discussion on product market fit, right? This question of, do you have product market fit or not, is the question that actually most of us are seed stage founders. At Sequoia, I spend most of my time in search. It's Sequoia's a scale-up program for early-stage companies, and getting product market fit is really the first and most important thing that seed-stage companies need to achieve, right? And that's what we'll talk about. So I'm pretty excited to be having this session with you. Let me now, I've got a set of slides that I'm going to go through. So I'm going to share my screen and get started here. Okay. Share that. Okay, can you see my screen now, Kyle? Gautam?
Rajan, not yet. See your screen is again.
Gautam, can you see my screen?
Not yet, Rajan.
Can you see my slides, guys?
No, Rajan, not yet.
So I don't understand. Okay, how about now? Can you see this now?
Yeah. Just see. Yeah.
Gautam, can you see the slides?
Yes, Rajan, we can see it now.
Okay, awesome. All right, guys. So this is a session that's been run by Startup India and Surge. I think all of you are familiar with Startup India. Let me now start with this. I think all of you are familiar with the National Startup Awards. This is India's most important startup awards. It's run by Startup India as part of the government of India. And all of you that are building startups, whether you're an early stage startup, late stage startup, there are many categories. Please do apply. Applications are open till February 15th, so you still have a bit of time. But we've been, as Sequoia, actually deeply involved with Startup India. In fact, we have a mentoring program that kicks off in a week or two for the winners of the National Startup Awards. We've been quite excited we've been very excited about the companies that were selected through the National Startup Awards, and I think it's a great platform for recognition, mentorship, and also some pretty cool awards. So I'd encourage all of you who are building companies to actually apply to this. Now, what we're going to do here, everyone, is we're going to use a polling tool called Mentimeter. As part of this presentation, I'm going to have a number of questions that I'm going to ask each of you. And those of you that are dialing in through live streams, if you could do one of two things, either go to www.menti.com and use the code 4030514, or you can just open up your smartphone and scan what you see right here on the screen. Gautam, can you see what's here on the screen? Can you see a QR code? Okay, guys, I'm going to wait while you guys get onto this.
Yes, Rajan, we can see.
Okay, great. I only see a handful of you currently on it. If you can please open up your phone. Guys, this is going to be fun. Those of you that are dialing in, if you're going to listen in over the next hour, please do participate because it will help me tailor how I present, what I'm going to really focus on in my presentation. If I can, it's largely, by the way, the polls are largely for me to get a better understanding of who is actually listening to this live stream. So that's good. We have about 24 of you already, but I'd love to get many more of you on this. If you're watching this, please open up your smartphone. It's pretty easy. Scan the QR code, go to the website, and I'll be able to. I'm just going to give it another minute and then we'll start. Okay, good. We've got about 40 of you now on Mentimeter. Okay, it's almost 50 now. That's great. And guys, if you're listening to this, please do. I see many more of you that are on our various live stream platforms. So please do go to menti.com and use the code, or just open up your smartphone and scan this. All right, cool. So we have about 60 of you already. So that's just a small fraction of those of you that are watching on the platform, but that's okay. Those of you that aren't on it, I think it'll be very useful, by the way, if you do, because you'll find this quite useful. All right, good. So let's start off with the first question. It's not a poll, but the first question: which industry are you from? What I'd like you to do is just put the industry that you're from. Whether it's, or see, you can see all the word clouds building up: e-commerce, food manufacturing, cloud, ed tech. All right, just put down the health tech, ed tech, SaaS, e-commerce. That's great. Venture capital. Wow, we see some venture capitalists here. Internet of Things, healthy snacks. Great. Consulting. Wow, that's interesting. Okay. Ed tech, SaaS, healthcare, health tech, HR. That's interesting. Okay. All right. So we have a good cross section of you from across edtech, e-commerce, SaaS, Internet of Things, design, and so on and so forth. Look like IT is the largest. So I don't know what IT means, but I assume it's technology sort of enabled across companies. Okay, terrific. SaaS is big. EdTech is big. Oh, interesting. Venture capital is quite large. I assume there are a few folks from venture capital firms. Health tech is interesting. All right, cool. So that's good. All right, let's go to the next one. Which city are you from? Please sort of just write down the city you're from. Delhi, Bangalore, Jakarta, wherever you're from. Most of you are probably from India. Chennai, Bangalore, Bombay, Chandigarh. Fantastic. Hyderabad, Pune, Kolkata, Nagpur. Great. Bangalore is still leading. I'm based in Delhi. I'm surprised there aren't more Delhiites. NCR, what's going on, Delhi? Bangalore and Bombay, Delhi. Those are the three. Oh, Hyderabad's catching up. Oh, there you go. Delhi, Bangalore, Bombay. Delhi, Bangalore, I see Bhopal, I see Chandigarh, Coimbatore, Goa. I see Dhaka. Hey, welcome from Dhaka, Rajkot. Terrific. Okay, I see Sydney. That's interesting. Okay, all right, terrific. So Delhi, Bangalore, and Mumbai, Pune. It's great to see many cities represented from across India. That's good. So we have across India. Okay, now this is a very important question. So what stage of company are you from? Idea stage, pre-launch, launched, early traction, launched, and significant traction. So tell us which of these buckets that you're from. This will be very helpful, that I can tailor my sort of thoughts depending on the stage of the company that you're in. Okay, so about a third of you are idea stage. That's great. About another 20% are pre-launch. So about half of you who are dialing in are either idea or pre-launch. About a third of you have launched and early traction, and about 10% actually have launched and significant traction. So those of you who have launched and significant traction, this session may not be as useful because if you've truly got significant traction, I'm hoping you have product market fit. But the last time I did this, what we discovered was even some of you that had launched at significant traction really didn't have product market fit, and that's actually a pretty dangerous place to be in. So, but that's great. So basically, we have a good mix of idea stage, about a third of you, close to a third of you who are pre-launch. So about 60% of the companies are idea stage and pre-launch. That's fantastic. About a third of you are launched in early traction, and then slightly less than 10% of you are launched in significant traction. That's fantastic. Okay, give us some sense of how many people do you have in your startup? Only co-founders, less than 10 employees. 11 to 50 employees and 50 plus employees. So about half the companies are only co-founders. That's understandable because we have a third of our companies that are idea stage, and we have another third of our companies that are pre-launch. So there you go. About 80% of the companies are co-founders or less than 10 employees. So very, very early stage. That's fantastic, everyone, because it's really great that we have so many of you that are from very early stage companies, because that is those are the types of companies for whom this session is going to be most useful. Okay, this is a very important question. Are you trained in product management? Yes, I was a PM before becoming a founder, joining a startup. No, learning on the job. Oh wow, interesting. A third of you were were trained as a product manager. No, okay, great. Learning on the job. This is pretty important, by the way, because if you're going to be a successful startup founder, it is very, very important that you learn product management deeply, and obviously, product market fit is one of the very important things that you're going to have to learn. But if you don't have a co-founder who's who's got trained in product management, you should take the time to actually get trained up in product management. It's super, super important. Okay, so there's about 20% of you, you were a product manager before becoming a founder. So first of all, for those of you, so for about 20% of you, which is 30 of you, I must let you know that you may find the next hour or so quite basic. So for those of you that find this very basic, I apologize ahead of time. But for the 33% of you that are not trained in product management, and the 50% of you close to that are learning on the job, I'm hoping that you will find this session actually quite useful. Okay, do you have product market fit? This is the key question, right? Do you have product market fit? So please let us know. And by the way, this is what you think. Hopefully, by the end of the session, some of you may actually revisit whether you have product market fit or not. So let's see what you guys have to say. Oh, that's interesting. 20% of you, have very strong signs of product market fit. That's fantastic. About 20% of you are saying no, and about half of you have early signs of product market fit. All right, guys, come on. There's another 50 of you that are on this that answered this question before. But by the way, if you haven't launched, you don't have product market fit. If you're idea stage, the answer is clearly no, right? You don't have product market fit. All right. All right, cool. So basically, about half of you are saying your early signs of product market fit. About 20% of you, a little less than 20% of you, have strong signs of PMF, which is great, right? So if you have strong signs of PMF, very quickly here, you'll be able to tell me, do you really have strong signs, or maybe you're not thinking about it the right way? I hope that you are thinking about it the right way. So, all right, terrific. So those are pretty much the set of polls that sets us up. Now, what I'd like to do is get into the discussion. Look, most seed stage companies, right? Since you have 80% of those of you that are dialing in are either at idea stage or you are at pre-launch stage, the thing that all of you should keep in mind is that most seed stage companies don't ever get to product market fit. And that is probably the single most important, I should say, the most commonly seen reason why startups fail is because they don't get to product market fit. And now here's the other interesting thing that we see is that many Series A companies also don't have strong product market fit. A lot of founders assume that just because they raise their 5 million or 10 million Series A, they have product market fit. Not necessarily. In fact, the reason that most Series A companies that raise Series A fail to raise their Series B is that they don't get to product market fit, right? So this is super, super important, and that's why it's such an important topic. And I would say if you're a seed stage company, it is the most important thing that you need to focus on. So all of you are, 80% of you are in what we call the 0 to 1 journey. And the most important objective in the 0 to 1 journey is finding product market fit, right? So this is super, super important. I'm assuming that's why all of you have dialed in. But it is the most important objective in the 0 to 1 journey is finding product market fit. So here's what we're going to cover today. Well, firstly, one of the important things you should keep in mind is until you have find product market fit, do not scale, do not grow the team, don't drive growth, and certainly don't blitz scale, right? The fastest way for you to actually kill your company or kill your startup is to start growing rapidly before you find product market fit. So that's a sort of an overall thought that I'm going to keep coming back to that, because I find startup founders continue repeatedly to make this mistake of they start driving growth, start trying to blitz scale before they actually get product market fit. Please don't do that. All right. So what we're going to cover today is how do you know when you have PMF? This is actually where we're going to spend most of our time, because as a startup founder, even if you're in idea stage or you're pre-launch, you should be very, very clear on how will you know when you have product market fit, because until you get to that, you just cannot go to the next stage, right? So that's the first one. What are the most important things you should do to increase your odds? So especially after you've launched, if you don't have product market fit, what do you need to do to find product market fit? And then if you don't have product market fit, what should you do, right? So this is going to be a very, very basic ground level discussion on what should you look for to know whether you have product market fit or not. And if you don't have product market fit, then what should you do about it? All right, let me ask another question here. How do you know when you have product market fit? Please type in on your Mentimeter, how do you know when you have product market fit? What do you look for? 80% of you that haven't launched yet, either you're at idea stage or pre-launch companies, what are you going to be look for? And 20% of you actually said, 18% of those of you that are dialing in actually said that you have very strong signs of product market fit. What do you look for? Repeat customers. Okay, that was one answer. Come on, guys, the rest of you. Only one person so far. Organic growth. Got it. Number 2. Traction. Okay. Repeatable users, user needs, customer approval. Got it. Keep going, guys. This is pretty important. How do you know when you have product market fit? User needs, demand, retention. Fantastic. Keep going, guys. Repeat usage. 25 repeat customers. Yeah, demand. Got it. Retention is winning right now. Repeat customers, user needs, demand. We have good metrics, market response, innovation, quick downloads, reading some of these strong sales, social media mentions. Actually, social media mentions has nothing to do with it. Funded companies, no, not necessarily. As I said, a lot of funded companies don't have product market fit. All right, cool. I think in the interest of time, let's keep going. Well, here's how, Andreessen Horowitz really started talking about product market fit many years ago. And this is what Mark Andreessen actually says, right? You can always feel product market fit when it's happening. The customers are buying the product just as fast as you can make it, or usage is growing just as fast as you can add more servers. Money from customers is piling up in your company checking account. You're hiring sales and customer support staff as fast as you can. Reporters are calling because they've heard about your hot new thing and they want to talk about it. This is ideally what you will see. You will know, we often sort of say, right? You'll know it when it happens because you'll feel it. It's just growing so fast, phones ringing off the hook, etc. But here's the thing, everyone, right? This actually very, very rarely happens. So the question is, look, if that hasn't happened, does that necessarily mean you don't have product market fit? No, not really. You could actually have product market fit. That is in a very rare instance. And by the way, when that happens, you are going to be off to a massive fast race, right? But that doesn't happen. So if that's not happening to you, it doesn't necessarily mean you don't have product market fit. So how will you know if that hasn't happened? You still may have product market fit, right? How will you know? Well, let's actually listen to Krishnan. Krishnan is one of the founders of Bukukas. Bukukas is a search company. Surge is, this is a company in our third cohort of Surge. We are currently in our fourth cohort of Surge. Those of you that don't know about Surge, you should look up Surge. Surge is Sequoia's scale-up program. Hey, Gautam, can I just play this video or will you play it?
Before Search, for sure, we didn't have PMF. As a matter of fact, I thought every company would get PMF in 2 months, so you don't have to do much. I didn't really take that topic that seriously because we had done enough research with the users, so we knew that we were building something that users wanted. So I thought PMF would just come in 2 months. It really helped that people like Rajan and others pointed it out very clearly, repeatedly, and that got our attention to that because we had assumed, oh, that's going to change when we change this feature, or that's going to change when this thing comes out. Like we had a very relaxed approach to that, which people at Surge pointed out very well for us to correct our way. The reason for that is very straightforward, right? Like if people don't stick with you, you have a leaky bucket. That means more water you pour in it, more water leaks out, and you don't have anything. So you just have a shell, right? There's no value to a shell. There's value to what's inside it, right? So which is the users that stick. The number one thing was listening to advice and actually following through on that, which was when we went into Surge, we had so many OKRs. So we had set up so many different OKRs for ourselves about, we need to get this license for doing this financial services. We need to get n number of different things, we had set it up. And I remember that conversation with Rajan very clearly where he was very clear, throw all of it out. Like literally throw all of it in the basket. You have one OKR that you should have, which is find PMF. So we took their advice to heart. We literally threw all our OKR away, and we had one OKR, which is find PMF.
Okay. So basically, this is pretty important right now. How do you know if you don't have what? Hey, Gautam, can you see my screen now? Sorry, guys, I'm going to keep asking because
yes, Rajan, we can see your screen. Yeah.
Okay, awesome.
I'll just keep playing the videos as we go along.
Sorry, you're playing the video?
I said I'll just keep playing the videos as we go along.
Yeah. Okay. I'll let you know when to run the video. So everyone, how do you know, right? If basically what Andreessen Horowitz talked about, Mark talked about, is not happening to you. Actually, the way you would know, and several of you mentioned this, is repeat customers, right? It's retention, right? If your customers are using your product and they continue to use your product and they love your product, then your product. Okay, there's a lot of background noise. What's going on, Gautam?
Is it better now, Rajan?
Yeah, now it's better, but make sure that there's no background noise. Okay, cool. So guys, it's retention, right? This is sort of what's most important. Now, if those of you that don't know what retention curves are, please go study up retention curves, right? So there are retention curves is what percentage of your users over a period of time keep coming back and using your product. Right? So there are three kinds of retention curves. There are retention curves that are declining retention curves. If you look at this slide, it's the one in the dark black line. You can see, right? So 100% of your customers use your product, let's say in the first month or day zero, but then over a period of time, that number goes to zero. If your retention curve, and by the way, you should plot this by day, you should plot it by month, and you can plot it by week, right? But let's say you plot this, let's say once you launch your product, you should let's say you've had let's say you launched a consumer internet app, for instance, and your app's been out there for, call it 3 months, and you find that your D30 retention is 2%, and your month 3 retention is 1%. That's a declining retention curve. You do not have product market fit, okay? You have a problem. You have a big problem because your users really don't like your app. So then you have the gray line, which is a flattening retention curve. That's a pretty good retention curve, right? What that means is, after about, you can see this here, right? After about, let's say, it could be after 2 months or 3 months, depending. And by the way, all these retention curves, the shape of the curve and what's good or not really varies a lot by category, right? So it's very different for gaming, for, let's say, a video content product, to an edtech company, to a digital health company. So the retention curves looks quite different. But generically speaking, if the retention curve flattens at 20, 30, 40%, that could be quite good, right? So, and we'll share some examples with you. And then finally, the best one is really the green one, right? What that is called a smiling retention curve. What that means is the retention drops, but then as time goes on, you keep reactivating users, right? So that is actually a good retention curve. So what does the retention curve of your product look like? And once you've launched is when you'll know. Becomes very, very important. So it doesn't really matter what kind of business that you're in, right? Whether you're a consumer internet company, whether you're a SaaS company, whether you're an edtech company, whether you're a digital health company, it doesn't matter, right? Make sure that you understand, especially once you launch, that you deeply track and understand your retention curves, because that is going to determine, whether that is going to help you understand whether you're getting close to getting product market fit, or whether you don't have product market fit. Okay. All right, let me ask you a question now. Go back to your polls, guys. You're building a video-based entertainment app, okay? Let's say you're building a short-form video entertainment app. There are many of these apps that got launched after the TikTok ban. And let's just assume that your month 3 app retention is 10%. Okay, so after 3 months, 10% of your customers are using your app. Do you have product market fit? Yes, no, or don't know? Okay, so far 70% are saying no, 20% are saying yes, 3% saying don't know. Come on, guys, this is not a trick question. 10% of customers who downloaded your app and used your app on either, I'd say, the first day or the first week, only 10% of them are now using your app after 3 months. Okay. Right. Okay, 46. Okay, so a large number of you are saying no. The answer is an unambiguous no. If you're building a video-based entertainment app and only 10% monthly retention, you do not have product market fit. You have a problem, right? You have to really go back to the drawing board and really figure out why is it that your users actually don't love your product. So this is very clear, and right, and that's why. And by the way, what I can tell you is a large number of the TikTok clones that got launched in India had very, very poor retention. That's why most of them either have gone away, some of them even raised funding and then kind of went away, right? The ones that are still here and doing quite well, especially the ones that have been around for the last 6-7 months, actually have very strong retention. So this is actually a very important point. Now let me go to a different category, right? I know there's probably at least 20-25% of you that are building SaaS companies, and SaaS, for those of you that don't know, is software as a service. You're building a SaaS company focused on US mid-market customers. Your monthly churn is 5%. Do you have product market fit? Yes, no, don't know. That's interesting. 75% of you that are saying yes. 40% of you are saying don't know. Come on, guys. Your monthly churn is 5%. So every month, 5% of your customers are churning away, right? Meaning they are not using your service anymore. Okay, all right. So 60% of you are saying yes, 20% of you are saying no, and 20% of you are saying don't know. So guys, the answer is an absolute no. This product is focused on the US mid-market, right? This is not India SME. It's US mid-market, and the monthly churn is 5%. What that means is, I just want you guys to think about this, okay? If your monthly churn is 5%, within 1 year, within 12 months, 60% of the customers that used your product, and this is a SaaS product, so these are mid-market companies in the US, don't use your product anymore. This product absolutely does not have product market fit. Okay, this product does not have product market fit. So hey, you have a problem, right? This company clearly has a problem. So again, right, as I said, it really depends on the kind of industry and the kind of metric. And by the way, so the first one we looked at retention. Here we are looking at churn, which is again a way to actually measure retention. Okay, here's another way to actually figure out whether you have product market fit or not. You ask this question: what percentage of customers would be deeply disappointed if they could not use your product or service? Right? Any guesses, guys, on what percentage? So the question is, if what percentage of your customers say they're deeply disappointed if they could not use your product or service, do you have product market fit? After what percentage? So, right, the way to think about this is, at what's the magic number, right? If you ask this question of all your customers who are using your product or service, and they said they were disappointed, what percentage were deeply disappointed, would you have product market fit? Okay, the numbers are all over the place: 50, 100, 75, 60. Okay, in the interest of time, I'm going to keep going. Magic number is, sorry, let me go back. The magic number is actually 40%. Okay, so if 40% of your customers say that, more than 40% or more, if they say they're going to be deeply disappointed if they could not use your product or service, that's actually a good sign. Obviously, the higher the number, the better, right? If 80% of your customers say they'll be deeply disappointed, then you absolutely have product market fit. If 90% and if 95% say they're deeply disappointed, that means you've got amazing product market fit. But if only 10% of your customers say they're deeply disappointed, or 20% say they're deeply disappointed, that means you've got a problem. You don't have product market fit, right? So this is another way in which you can actually say whether you have product market fit or not. Just moving on, as I said, this is really, really important. A lot of founders don't realize this. What is good, right? Good in quotes, user retention actually varies a lot, right? Whether are you a consumer social app? Are you a consumer transactional product? Are you a consumer SaaS? What's called prosumer SaaS? Are you a mid-market SaaS? Are you an enterprise SaaS, right? So the retention, the retention that you're looking for really to be good, right? Quote unquote good, varies pretty dramatically depending on, we already shared some examples with you. But what I wanted to, recommend to all of you is, depending on the kind of startup that you're building, make sure that you do enough research, you talk to enough folks, in the ecosystem to understand what you should define as benchmark retention levels, depending on the company that you're building. Okay, so this is the 40% magic number that I mentioned, right? So if you've got more than 40% or more of your customers who are saying they're going to be deeply disappointed or very disappointed, then actually that's a pretty good sign. So this is actually a simple way in which you can think about whether you have product market fit or not. Now let me talk about PMF in SaaS companies, right? So these are just some ways you can think about it. So let's say you're actually building a SaaS, software as a service product for enterprise. If you can get 10 paying customers who don't churn, right, where LTV, lifetime value, is greater than your cost of acquisition, then we would say that's actually a pretty good sign that you're likely to have product market fit, right? If you're focusing on US SMB SaaS, right, so this is, you're selling to US customers, you have a paid product. If you have less than 2% monthly churn, right? Remember, the example that I asked you guys was 5% monthly churn for mid-market SaaS. 5% monthly churn is terrible, right? But if you're targeting US small, medium businesses and you've got 2% monthly churn, that's actually a pretty good sign, right? And now let's say you're focusing on India SME, right? So you have companies like Pagabook, like Katabook, like Dukaan and others, right? If you have, and this is basically where you have a free product that you launch. This is not a paid product, but let's say you are doing India SME freemium SaaS, right? The product is largely free, and now you're seeing some of these companies actually, launch, paid products, but largely the product is free. If you have month 6 retention of more than 30%, we would say that's a pretty good sign, right? So again, it's not one one number for all of these, right? So again, it depends entirely on the kind of startup and the kind of segment that you're targeting in. And I'm hoping this is really landing for all of you, because I find that very, very few startups actually know what is it that they should be looking for when it comes to retention, to know whether they've got product market fit or not. Now, in terms of how to drive retention, really there's only one approach, everyone, right? You have to be customer obsessed. And if there's one thing that, there are two things that I'd like you to take away from today. One, know how you're going to measure product market fit. How will you know whether you have product market fit or not? Second, just obsess about your customers. So how to drive retention? There's only one approach, customer obsessed. It's not about being technology first. It's not about focusing on your investors. It's not about focusing on your competitors. And it certainly isn't about focusing on your skill sets, right? It's about being customer obsessed. And it really always starts with know your customer, right? And keep in mind one thing, right? You may have started your company because you were trying to solve your specific problem. That is fantastic. And we think that that's actually a great way to start, because it's a problem that you actually know deeply. But keep in mind that you're not the only user of your product, right? So being really knowing who the user of your who is going to be the user of your product or service that you're building, and deeply knowing that user becomes very, very important. Now, what are the most important things to increase the odds of finding PMF? So let's say you don't have PMF, or your pre-launch company, and you want to make sure that you launch and get to PMF. Very clearly define the user. Personas, we'll talk a little bit more about that, right? Who is the user? By the way, I can't tell you how many startups that we meet. Every week in my role at Sequoia, every day I probably meet between 3 and 5 new companies. So call it I meet between 15 and 25 companies a week, startups a week. More than half of them are not able to clearly define who is the user, right? It's not all consumers. It's not all women. It's not all women between 15 and 34. That is not a segment that matters, right? Very, very clearly, especially as a seed stage company, you need to be able to very clearly define who the user is. Second is, why will they love you, right? Why will they use your product, and why will you delight them? What is that core user need that you're trying to meet? Being able to very clearly identify that core user need that you're going to meet, and how are you going to create that wow moment for them, right? How will you delight that user? What is the need, and how will you delight the user? And then the last thing is, when it comes to retention, look, why will they keep coming back, right? It's a very, very important question. You may be able to delight them and create a wow moment once, but why will they keep coming back? So these are really the things that you need to think about. Let's run this video, Gautam. I'd like you to hear from...
User personas is something that we worked on after becoming a part of the Surge program. We built Conversite because we've seen admin pain points firsthand. We're absolutely user obsessed. We call ourselves community obsessed because we understand the kind of pains that admin take to manage these communities, and the fact that they're not able to monetize these communities. That's the reason we started. So we have a very deep understanding of the user, but we had never thought about creating personas. After this session, this is a project that I undertook, and for the next 1 month, the task was running surveys, interviewing users, and even the users that we selected for interviews were different kind of admins, different kind of users. And then we prepared a list of questions to ask them. We prepared something called a need map, right? Because needs are important. It's important. The exercise was to understand the user. What are their needs as a community admin? So functionally, what do they need? And from a behavior perspective. And what came out of it was amazing, something I had never known or comprehended before, which was our persona. And our persona was aspiring community entrepreneur. I don't think we would have ever landed on it like that if we would not have done this exercise. Now, the benefit of doing this is it really focuses all of our energy and efforts towards that particular group of people. It's about knowing who are we building for. It's like, we have an image, right? If I say Harry Potter, we have an image in our mind. So similarly, like it's painting an image of a user who we are all here to serve. right? Each one of us have not lived in those shoes. I've been a community admin, so I know. But in rest of the team, like in our entire team, there's very few people. There's 2 or 3 people, and we always prefer getting people who've been community admins so they understand the pain points of even day-to-day management. But none of them have been through that pain. Until you don't go through that pain point, until you've not experienced it, it's very hard to envision who is the person I'm building for. So it's beyond just like product. It's really everyone in the team knows that who is this person. It's almost like living, in their role every single day. And that's how clearly the persona helps you understand the user.
Okay, Gautam. Let's. Is the video?
Yes, Rajan. We just heard Tamanna.
Okay, awesome. All right, let's keep going. Let's now hear from Sanket about implementing growth loops once you have found product market fit. Actually, you know what? Let's skip this. Let's skip this, Gautam. Let's skip this.
Sure.
I want to skip this.
Right.
Okay, so I think identifying very, very clearly who the user is, right, is super important. And again, I can't overemphasize how important it is for you to carefully think through that. But the other one really is, right, is your product materially better at meeting the core user need than the next best solution? So for instance, Zoom was not the first video conferencing service, was not the second, not the third, not the fifth, not the 10th, right? But it just works. It was 10x better than the next best solution, right? Obviously, Google Meet. Hey, Gautam, can you just mute? There's a lot of background noise. Thanks. So this is important, right? I mean, at Surge, we talk about, is your product 10x better than the next best solution, right? Are you able to 10x better meet the needs of a solution? So this is actually an interesting thing, right? So even if you take a very, very crowded, very competitive 20-year category like video conferencing, right? What people don't realize is, look, Zoom's a now $100 billion market cap company, but it was not the first, not even the 10th video conferencing service, right? But they just made a product that just works. It was materially better than all the other solutions in the marketplace. So know the user, and then know the user need, and then build a solution that is materially better than the next best solutions, right? Here are some mistakes that are made by seed stage companies on their path to PMF, right? Who are you building for, right? I mean, I can't tell you, as I said, more than half the companies that come and pitch to Surge, especially our early stage program, right? They don't have clarity on who they're building for, right? They're not able to tell us very, very clearly who they're building for. And building for everyone is not an option in an early stage company, right? So when you're a company like a Google or a Facebook, you can talk about building for 1 billion consumers or for 2 billion consumers, right? So at Google, product managers will talk about we build for everyone. Well, when you're a seed stage company, you can't build for everyone, right? You have to build for a very, very focused set of users, right? The second is, what is the most important pain point you're solving, right? Have you very clearly identified that core user need that you're not trying to solve? And one of the mistakes we see is, founders are not able to articulate. Not only can't they articulate who the specific user is, but they're not able to very clearly articulate what is that pain point that you're trying to solve, that core user need that you're trying to solve. And please do keep in mind, another big mistake we see is founders just keep adding features, right? Look, the way to get to product market fit is not to keep adding features, but is to deeply understand the core user need and to build a product with a limited set of features that is able to deliver a wow moment and meet the needs of that user, right? And ideally do it 10x better than the next best solution. And that's what we call core value. So I'll talk about core value of your product in a minute, right? And the other thing that we see is mistake is founders and startups are not really experimenting fast enough, right? Because keep in mind, if your retention is far off from where it needs to be, and your retention isn't going up, you need to keep experimenting, right? So that you find what's working, what's not working, and you keep going from there. And then, of course, the biggest mistake is driving growth before reaching PMF. I can't emphasize this enough. It's something that we talk to our founders at Surge every single week. we talk about this, right? So do not drive growth if you don't have product market fit. Many of you will end up raising around. It may be a crore, it may be 5 crores, it may be 10 crores. Some of you will actually end up raising 50 to 100 crores. But if you don't have product market fit, do not drive growth, because your natural tendency would be you raise 5 crores, you want to spend money on marketing, you want to go from 5 people to 10 people to 50 people. If you don't have product market fit, just don't go there. Okay, do not drive growth, because the only thing you will end up doing is creating a leaky bucket, actually spending the money that you've raised, and you won't become a successful company. So if you don't have product market fit, what should you do if you don't have product market fit, right? That's the question that all of you are asking. So again, going back, if you don't have product market fit, talk to users. And by the way, you have to do it the right way, because one of the things we ran a program on how to do customer interviews, right? Or user interviews. It was amazing to us that even our search founders, many of them actually didn't know how to do user interviews the right way. Those of you that are trained product managers will know what I'm talking about, right? So how do you gather real insights? Talk to your users, talk to them every single day. I don't mean just look. I know hopefully all of you are looking at your data every single day, right? I'm not talking about looking at the data. I'm actually talking about talking to your users every single day. And you should talk about their problems instead of your idea, right? First, try to understand what they're struggling with, understand their problems, understand their needs. Don't pitch your idea. Don't talk to them about your idea, because before you do that, you need to understand that, right? And ask them about how they've solved the problem in the past, right? Not subjective. One of the really bad questions is a question that says, would you use this product if you have it? Almost every user will say yes. Very few will actually ever use it, right? So instead of asking that question, which is a leading question, try to understand their current behavior. What do they do today? What kinds of products do they need? Are they actually, how are they solving this problem that they have today? Try to understand that, because that will actually help you think through how you can build a 10x better solution. Lastly is listen, truly listen, right? You should not be doing you should be doing very little of the talking when you're talking to your users, right? They should be doing most of their talking. I'm amazed to see how many times in user interviews, the founder is actually doing most of the talking, right? Which means you're pitching your idea. You're not really listening to sort of see what the user really wants, right? So talk to users, but learn how to do this the right way. And those of you that don't know this, spend 2 or 3 hours. Just learn, on the internet, there are so many there's so many sources that you can get on how to do a user interview the right way. Second is precisely define the user persona, right? We talked about this. So let me talk about, any HR manager. So let's say you're building some HR tech. I saw one of the spaces is HR tech, right? So I assume at least there are 1 or 2 of you in this call that are building possibly SaaS software for, HR SaaS software, right? Any HR manager is not your user persona, right? So it could be, a CHRO or a VP of HR at 1,000+ white collar employee company based out of India, Southeast Asia. Now that is a user persona, right? It's very, very specific. It's this kind of role in this kind of company, in this size of company, in a specific geography, right? So that's sort of how you need to go. So if you look at a B2C example, if you're building a travel company, your user persona is not any traveler, right? It could be 18 to 30-year-old budget traveler, typically based out of a metro city with a monthly income of, let's say, 30,000 rupees, right? Who takes 2 vacations a year. So that is actually pretty precise. And that's the level of precision that you want to get to, because otherwise you really don't know who the user is, and therefore you can't figure out the core user need of that user, which will actually then help you build a solution that is 10x better, right? And then the last thing is ensure you're solving one of the top 2 to 3 problems on their mind. Otherwise, they won't care. Look, I can't tell you, we see so many startups that are solving what we call nice to have problems, as opposed to the must-have core user needs, right? So you've got to solve a problem or meet a need that is a very, very important need of a user, right? Otherwise, you're going to end up building a nice-to-have product, which always end up in basically a mediocre company that pretty much goes nowhere, right? So precisely try to get to the user persona and define it in a very, very clear way. The next one is really deliver core value, right? Core value is that sort of that core value that you're delivering, that the user really cares about. And one interesting way to think about it is reduce the time and effort for users to experience. Look, in every product or service, there is a magic moment. that is when the user's sort of magic moment, right? When you've delivered the core value for that user, right? And what you have to do as a product, whether it's a product or a service, is reduce the time and effort when they can get to that magic moment, right? And ideally in a B2C, let's say you've got a B2C, product, consumer product, let's say either an app or even a consumer product. Ideally, it should be instant, right? Try to get to that magic moment, almost immediately, right? If you're B2B, again, right, it should be quick, right? Maybe in an SMB environment, ideally near instant, a couple of minutes, maybe 2-3 minutes. And in enterprise, also again, right, maybe it's a month because it takes time to actually get the technology, the product deployed. But the sooner you can get to delivering the magic moment, the better it is, right? And this is why, for instance, if you're building a consumer app and your user flow is very cumbersome, right? It takes 7 steps to sign up to a product. I mean, you've already lost the user. That's where your retention sucks, because nobody's going to even go through the entire user flow to actually sign up to it. And then if it actually takes many minutes before you can deliver that magic moment to the user, you've really lost the user, right? So this is actually very important. So know what the core value is, and then try to figure out how you can deliver that core value as soon as you can. And then finally, look, use data, right? You can only do this, by the way, once you've launched the product. So intuition is really, really important for founders. Great product managers have fantastic intuition, but great product managers use data more than any other function that I've seen, right? So use data to complement your intuition, and please set up your analytics from day one, right? And for instance, some of the questions you should be able to answer: which acquisition channel converting better? That's pretty important, especially after you start using different. What is your user retention? Super important, right? If you've launched and you've only been in market even for 5 days, you should be measuring user retention, right? And so may use the data to actually do that. What is your percentage of users who are using your product daily, weekly, monthly, etc.? And what actions lead to retained users, right? This is really, really important. So being able to define the set of core user actions, and the way you should think about this is, look, even within retention, right, you're going to have power users. Those are the users who use your product the most. Your power users are going to take a certain set of actions, and after they've that get them to be a power user. Being able to identify those set of actions that make a user a power user and therefore a retained user is really, really important. And if you haven't been able to get to that yet, clearly means you don't have product market fit, right? And trying to figure that out is super important, right? So you can say played 2 games within 7 days, made 3 transactions in 15 days. So depending on the business again, right, you should be able to determine the set of actions that lead to a retained user. And again, depending on the business, that will vary, but going through those analytics and that sort of journey to figure that out becomes very, very important. So again, right, those are just some basic tips. We could spend, the next week talking about each one of those, right? In fact, with some of our founders, actually, we spent a whole week on how to do user interviews, right? We had a session that we actually ran, not for search, but, for a subset of our search founders on just product management, right? Building sort of product management. It was a product management 101 session where we spent a whole week on how to do user interviews, right? So make sure that, you kind of go through each of those, right? Talk to customers, figure out the user persona, identify the core value that you're trying to deliver, and then deliver that core value as soon as you can, and then just rinse, repeat, right? So we'll keep working on getting to product market fit. And let me tell you, right, again, for the 5th time or 10th time, without product market fit, you won't have a product, let alone a company, right? You will not be able to build a startup that's of any scale, size, and value. Last thing before I open up for questions, Surge is basically Sequoia's seed stage scale up program. We'd love to have you guys. We are actually currently running our 4th cohort where we have 17 companies. They come from across different tech and tech-enabled industries in India and Southeast Asia. So it's a program for India and Southeast Asia from Sequoia Capital India. And we are currently in our 4th cohort. So we'd love to hear from you if you're a seed stage founder. We invest $1 to $2 million of capital upfront, and then we have a 15-week very, very intensive program that we run through. We run it online, obviously, given COVID, and then we do lots of one-on-one mentoring, hands-on mentoring. And not surprisingly, what's the topic that we cover a huge amount of time on? It's the one that I've just spent an hour with all of you on, which is finding product market fit. But that's just one of many different topics that we cover with the founders who get into search. So we'd love to hear from you. If you're a seed stage founder, please do apply. You can go to searchahead.com and apply. So with that, thank you for the time. I know we are exactly at 5, but we had set aside some time for those of you that want to stay on and ask a bunch of questions. So if you have questions, please go ahead and ask the questions. We will gather those questions and I will answer them. So with that, let me go back here. Stop sharing. Okay, I've stopped sharing, and now maybe Payal and Gautam, we can see if there are questions on the feeds that we can take.
Yeah, so some have, thank you, Rajan, some have come in while you were presenting. So we can take a few, probably not all in the interest of time. The first question is, we're introducing a new technology which is supposed to disrupt the existing product in the market. How do we solve for PMF early on, as we need to train or create customer awareness before they appreciate our innovation?
Yeah, it's a great question. Look, the way you should think about it, right, is, so let's say I don't know exactly what the product is, but let's say it's a consumer product, okay? And let's say this is a consumer product eventually that's going to be used by millions of users. But initially, look, find 50 customers, right? So one of the things we actually talk about, with especially at seed stage, is at seed stage you have to do things that don't scale, okay? So go get 50 customers who are going to use your product. Literally call up your friends, or by the way, you have to figure out your core user persona, right? So your friends may or may not be in your core target group, or it could be women of a certain demographic in rural India, right? If that's the case, you should go to rural India and actually physically recruit them to actually try to start using your product, right? So you'll have to do things that don't scale in the early days to get a small group. It could be 50, it could be 100. If I'm talking about a consumer product, right, it could be 1,000. But if you get 1,000 consumers to actually start using your product, you will start getting data on what's working and what's not working, right? Are you delivering core value to those users or not? Are they coming back and using the product, right? And so on and so forth. So that is sort of what you have to do. Is you get a small, here's the thing, right? With product market fit, I'll give you a very interesting example, okay? I think it was I can't remember, either second or third cohort of Surge. We were looking at companies in a specific space, right? We had one company that had 100,000 users okay retention. Okay, retention wasn't great. We had another company that basically only had 5,000 users. Okay, this is for consumer internet today in India with 400 million daily active users, actually close to 500 million daily active users in India. Getting 5,000 users isn't very hard. But the retention of those 5,000 users was just off the charts great. So we actually decided that was the company we should focus a lot more time on, not the company that had 100,000 active users, because the 100,000 active users with poor retention actually pretty much showed that there really wasn't any product market fit there. Whereas with a few thousand users, if you have great user love and retention, that was actually much more interesting to look at. So you don't worry as much about trying to get a large number of users, right? It's a small number of users that love your product, that continue to use your product, right? So user love and retention. So that's the way sort of I would think about it. And in the early days, it's perfectly fine things to do things that don't scale, to be able to go out and get those set of users.
Great. Since you mentioned retention, Rajan, there's a question on this where someone's asking, how can you go about figuring retention rates in order to figure out your PMF for high ticket categories where purchases may not be very frequent? And they're giving examples of like furniture and jewelry and so on.
Yeah, no, that's a great question, actually. So in those cases, right, try to measure NPS, Net Promoter Score, right? So meaning, if somebody bought your product, how satisfied are they with your product, right? So let's just say, right, let's say you're buying a house. You don't buy a house every 6 months. So, retention, especially if you have people aren't going to come to your website, every month, they buy your house, and, you can do things to actually get people to come to your website. So the real question is, I look at two things, right? Customer satisfaction. Are they very, very satisfied with whatever they bought from you? And second, your unit economics, do they work, right? Because look, if you're in a transactional business, the one that you guys just mentioned, that the founder just mentioned, right? It's very easy to sell. You can sell lots and lots of things at unlimited amounts, if you don't make any money on the things that you sell. Look at your unit economics. Like, for instance, right, in infrequent purchasers, your customer acquisition can be quite high. So what is your CAC to LTV? Right? How does your cost of acquisition compare with your lifetime value? Because your lifetime value, because you have a very high ticket value, if your gross margins are high and your unit economics are strong, your actually CAC to LTV could be quite attractive. So I would look at both of those as a good way to know whether you have, is your LTV significantly higher than your CAC, and do you have very high customer satisfaction for those customers who've actually bought your product? And if those two things actually look very strong, that's probably a pretty good indication that you have product market fit. Because you can imagine, right? Even if you have a high ticket one, let's say you don't make a lot of money, then what's the point, right? Because that person is not your customer is not going to buy, this product very often. And even worse would be, the customers that have bought your product, they're not very satisfied with your product, and that's a bad sign.
The next question, I suspect, is coming from someone in the investment space. I come from the school of conventional investing. I want to understand your perspective on how to evaluate a startup which has little or no revenue at one time. What broad metrics you keep in mind while making investment decisions? I think you've touched upon it, but do you want to do a quick summary?
Yeah, I think, look, first of all, keep in mind that, especially if you're a seed stage investor, which is, at Surge, we are seed stage investors. As part of Sequoia, right? We are fundamentally betting on the team. Okay, so a good 1/3 of the companies that we invest in Surge actually are pre-launch companies, right? So by the way, those of you that are at idea stage or haven't launched yet, feel free to apply to Surge, because a good 1/3 of our companies haven't launched yet. So the most important thing as a seed stage investor you're looking at actually is the quality of the team. And maybe Payal, we can post. We actually did a whole series of what seed stage, raising your seed funding round, where we actually talked about what investors look for in founders. But really, the founding team, I would say, is by far the most important thing that we look for. And then the second thing is, look, if the company has launched, then we look at the metrics, right? If they've launched a product in the metric, actually, the metrics can tell you a lot. We can look at. I'll give you some examples, right? If you're looking at a consumer product brand that's, let's say, selling on Amazon, we look at Amazon ratings to see how do the ratings compare, right? If it's a consumer product brand that's selling on their own website, we will look at repeat rates, right? We will look at unit economics or things like that. If it's a consumer app and they've got, I don't know, 10, 20,000 users, we look at things like time spent, we look at retention, we look at all those kinds of things. So, but again, at the end of the day, right, as seed stage investors, a lot of the time you're basically betting on a founding team that has an idea of what they want to build, but really hasn't really launched it yet. So at the end of the day, it's the assessment that you make of the founding team that is the most important. If you ask me, as a seed stage investor, what's the most important thing that you're looking for in a seed stage company? It's the founding team. You're trying to assess whether this is a team that has the passion, the knowledge, the capability, the relentless sort of behavior that they demonstrated, that which is going to help them go for 10, 15 years through many near-death moments to be able to eventually build an enduring company.
All right, next question. Speaking of enduring companies, when a company reaches scale or is at growth stage, what are your recommendations in terms of tweaking your product market fit to ensure that you keep pace with your consumers in your market? Or do you even need to do
Payal,
that?
can you repeat that question, Payal?
They're asking that once you reach growth stage or reach scale in a certain company, do you need to keep an eye on your PMF, and do you have to tweak it at growth stage? And if yes, then what are the things that you need to keep in mind?
No, absolutely, right? So just because you found product market fit once doesn't mean that it lasts forever, right? Because keep in mind, product market fit is you have identified a certain user group for which your product or service delivers extraordinary value, which keeps coming, which keeps them coming back. But as your company grows, right, you have to keep expanding the customers that you have to sell your products to. So as a result, just because a product works in a specific segment doesn't necessarily mean that it's going to work in another segment, right? So you have to always keep watching for retention, for customer delight, for user love. And what you'll see is as the company grows bigger, as you keep expanding into new segments, in many segments, your product may actually not work. So you have to go back to the drawing board and say, what do we need to do with our product to make it work for this new segment that's going to give us that next 10x growth, right? So I have a concept called the power user wall, right? What it means is, every power user group that you have eventually hits a wall, and then you've got to find sort of the next set of users, and you've got to figure out what's going to work for the next set of users.
This is an interesting one. How would you try to relate pre-launch social media engagement to possible PMF? Do you have any suggestions there?
Yeah, look, just because you're great at Twitter doesn't mean you can actually get to product market fit. I must tell you, those of you that, by the way, don't have product market fit, I assume there are many founders, several hundred of you on this live stream. If you haven't found product market fit, please don't tweet about product market fit. Because I know of founders who don't have product market fit, who have barely launched, who go tweeting about product market fit. Please don't. First, find product market fit, right? Because just because you have 10,000 followers doesn't mean you're going to have product market fit. Product market fit is you're going to launch a product and you're going to have high retention on your product. It doesn't mean just because you got 10,000 followers, your personal Twitter handle or your Instagram handle doesn't mean you have product market fit, right? At the end of the day, are users using your product that you've launched in the market? Because keep in mind, you could tweet about all kinds of interesting things and build followers. Doesn't mean the users are going to keep coming back to your app. If you're building a consumer internet app, for instance, same thing could apply for various products, right? Now, by the way, you can do a lot of testing, right? So, for instance, using social, whether it's Facebook, Instagram, especially, and other social platforms. In Southeast Asia, you can still use platforms like TikTok to test product concepts, right? To sort of do a form fill quickly, see whether a customer will be interested in it. Can they actually use your product? So that's the sort of thing that you can actually do quite well.
Okay, another question. If you're an early stage B2B company with just the MVP, what are the steps you can take to ensure that your pilot lands with your market?
Yeah, go sign up some customers, right? And make sure that they deploy the product and they use the product and deliver value. Look, there's no substitute for getting your customers to use your product. So, if you're a B2B company, go find a few customers who are going to use your product and figure out and make sure that they come from the right. Remember, in B2B parlance, we have something called ICP, the ideal customer profile. It's sort of what I talked about, the user personas, the precise user personas. In B2B, it's called ICP, ideal customer profile, right? In your ICP, go find a bunch of customers, convince them to actually use your product and see whether they're able to derive value from your product. There's no substitute for just going out there, talking to customers, getting your customers, somehow get them to start using your product, and then actually see, because, look, here's the amazing thing, right? If you deliver core value, they will continue to use your product. If you don't deliver core value and do it quickly, meaning speed to value is very, very important, right? They're not going to use your product. They're not going to come back to use your product.
Great. Thanks, Rajan. I think with that, we can wrap for the day. Thank you, everyone, for making it. Really appreciate your time and for staying beyond the slotted 1 hour. And we'll continue to do more such talks along with Startup India. So do keep an eye out on their pages for the next one. Appreciate your time.
Thank you, Payal. Thank you, Gautam. And also, before I hand it over to Gautam, those of you that dialed in, National Startup Awards, very big deal. It's by the way, and those of you that actually win the National Startup Awards, that Sequoia team, we are committing all our partners to actually mentor the National Startup Award winners. And lastly, apply to Surge. We'd love to surge ahead with you. With that, Gautam, over to you.
Thank you so much, Rajan. Thank you for taking out the time for doing it for the viewers. We've had a lovely audience today joining us from all across the country. Like you said, like earlier, we saw people from tier 2 towns. And in fact, we've seen people from our neighboring countries as well. So it's lovely to have hosted our audience in this engaging session. And we are going to come out with more such sessions. Do reach out to us if you have any particular, ideas or anything that you want us to create a workshop on. Feel free to reach out to us across our social media channels as well. or our email address, which you can also see at the bottom of the screen right now. Do reach out to us and we'll curate more such sessions for you. Thank you so much for joining.